Hey guys, welcome back. In today's video, we are talking about the AMC short increasing, the bullish signs, the mass selling that's happening right now, and many more in this video. First, we're taking a look at this from Robert M. You can see this. The days to cover for AMC is actually increasing. So what we are seeing right now is, of course, the short shares for AMC to also be increasing along with that, because it takes them longer days to cover these shares. And this, of course, is just one sign. Now, when you take a look at this as well, it's also another indication. But one thing we do know is obviously with what's happening, something that we covered recently was obviously talking about how BlackRock bought 25 million AMC shares. Now, this was an obvious indication that institutions want to buy in to AMC. Now, they want to buy into AMC because they understand the potential. They understand the fundamentals of AMC. So they obviously want to get it in at the cheapest price possible. And that's why we see, as we're seeing the institutional ownership to be increasing, we're also seeing the shorts to be increasing as well, because they want to push the price down as much as possible to try and force the retail investors to sell. One of the things that we've always talked about was the sentimental effect that they want to create by pushing the price down. Obviously, with them increasing the amount of short shares, it will bring the price down. With the price going down, what they hope to do is obviously get retail investors to sell, and that's what they are trying to do. And we are seeing this because we are seeing right now BlackRock, along with many others as well, and I'm only using BlackRock because of the significance that they have in terms of showing how people are realizing what an opportunity AMC is right now. And another thing is also to be looking out is the IMAX reports earnings tomorrow. As is the premium brand of exhibitors, its business model is different from AMC and CNK. Nonetheless, interesting to note, it trades at nearly 10 times AMC's price to sales. So something that we can obviously look out for is for the IMAX earnings. Now, bear in mind is that Cinemark's earnings is also before AMC's earnings. So we're definitely going to be having a lot to look at in terms of understanding where we will be also placing for the fundamentals. But it's just good to make a comparison. And one of the things is to understand is that if these firms were to have good earnings coming out, whether it's IMAX, whether it's Cinemark or any others, then AMC is very likely to do so as well. Bear in mind, we had the best ever June EBITDA, so it's obviously understandable that AMC is performing even better. And that's why, like I said, when we have to obviously definitely pay attention to this. And it's also talking about how AMC will become even more divergent in terms of fundamentals versus stock price, the definition of DFV. And like we talked about, everything right now that we're about to be seeing is to understand to a deeper level with the fundamentals what AMC's respective value should be. Is it actually a value play? Now, I'm guessing that it's very likely that the earnings that we are seeing, again, is in my own opinion, is that we will find out from the earnings that AMC is a very deep value play because of everything that it's going on. And we know that because of these indications that we talked about with BlackRock obviously buying into AMC. Another thing is understanding the algorithms. You can see AMC and GME, exact same time frame, peaks and lows. And now if you guys take a look at this for AMC, and as a comparison, you guys can see the two. Now you can literally see just at the top AMC peaked, so did GME. And then you can see here AMC is lows, and it's also GME's low as well, with of course the occasional up and down as well that you guys can see here. So this is obviously clear understanding that there is manipulation, and the short sellers of AMC and GME are of course mutual. And is why we talked about when AMC has volume coming in, so would GME, because of the fact that they are obviously seeing their capital allocation to be messing up when they do see buys coming in for AMC. Vice versa, the same also applies for GME as well. And this is a clear understanding, and I think it's a very clear indication of the manipulation that is happening. And that's why it's on the subject, and whether it's GME or AMC, we have to understand what's going on. And one thing you can see is GME is experiencing a surge in options activity today, with $14 million flowing into bullish trades. So we're seeing more options happening again for GME. One of the things we covered in our yesterday's video was talking about how Roaring Kitty's latest finding shows he has zero ownership now in Chewy. So he also obviously AMC has a massive amount of cash available, and with what we've seen in the past, it's very likely that his cash was being used to buy shares or calls of GME and even potentially AMC, and this is why we're seeing the capital flowing in. But that itself is definitely already a good sign in terms of understanding, again, where the money is coming, where the money is going, and it's definitely understandable, when we consider that Roaring Kitty to be a significant figure within this whole space. And so it gives us a good indication of what's to be expected and the volatility that it's about to come. Another thing is also short volume has been low and shares available high. They know what's about to happen. They could have and would have shorted otherwise. This goes for AMC and GME since that they're both linked through ETFs. So one of the things we talked about again yesterday was the ETF of AMC, and it's the 1X daily AMC ETF, and it's to obviously short against AMC. And what you can see is at the start of the video, we obviously talked about how, we're seeing the days to cover obviously go up. But what we find very interesting is, of course, the shares available to be increasing as well. So what we understand is, firstly, that the short shares are increasing. So it means that they are still creating more synthetics even as of now. They definitely are preparing for something to obviously prevent the price of AMC from going up. We know this because we are seeing the days to cover going up, and we're seeing that the shares available is also increasing. So we definitely can make an understanding of what's going on there. But it's not only that, it's also because, and it's very important to understand this, so that you guys understand what happens when a single stock ETF is applied. When MOAS happens, is to make money off the volatility. So when it jumps, they can short the drops on the ETF only and pay for all that is rolled over swaps from the past. And this is obviously one of the methods. Now, we talked about this in terms of yesterday and our previous videos in the past before, how shorts are obviously trying to find ways of exploiting these loopholes, of manipulating. We've seen it with the AMC ETF. We've seen it with the other ETFs as well. There are so many ETFs that are used in order to short whether it's AMC or it's GME, and they do that through, like we talked about, through the swaps from ETF. We've seen them do it through crypto, from tokens, from the locates, and many more. But all of that is just pinpointing to one thing, that they are desperate, that they are worried, and that they only are trying to suppress us to get us to sell. As always, none of this is ever financial advice, so do take our saying of some. We should do your own due diligence and research. Now, another thing to look out for is institutional traders just sold the most amount of stocks last week in more than 9 years. In every bubble like 1929, 1987, 2001, and 2008, the last stages were when institutions started dumping on their bags, holding retail, which buy it up. The bubble will pop. So this is just one of the many things that we've shown on this channel by now. This is just one of the many signs that we're seeing for what we should be expecting in the very near future. We're seeing factors such as, of course, the illiquidity issues, the loans that are getting out of hand, the over leveraged positions that are getting out of hand, and now even in this case, the second largest net sale by institutions in the data history since 2010. And what we are likely to be looking at is, of course, another major crash happening for the market. The very fact that we're already seeing them sell should give you a sign of course, what's happening. And that itself is already very, very worrying. We talked about one of the things in terms of understanding the fire sale that's about to happen. Now, that itself is worrying for the market, but is of course good for us. And the reason why we say this is because with a fire sale in the market, it drastically brings down the value of stocks. By bringing down the value of stocks, it brings down the value of collaterals, and therefore shorts have less money to obviously try and create more synthetics. And of course, you can understand why that's obviously good for us. Furthermore, just know they will try to use Thanksgiving as a psychological influence to make you sell. AMC GME especially, how the algo is perfect on DJT is currently perfectly reflected on a one-to-one basis with AMC, where of course if you're taking a look at this and what we've seen, like we've seen in the past, the short sellers are very likely to be the same short sellers over and over again, and they use the same algorithms over and over again. So if we see this algorithm happening on another stock and we're seeing happening here, it's very likely is the same algorithm with the same short sellers, but it's also understanding that the moves will also be the same as well. We've already understood how they try to manipulate. Again, this is something that we've gone in the past. So it's understanding that we are looking at how they're trying to force you to sell your shares. Now, Fidelity is changing their liquidity provider from BNC banks to BNY Mellon. Plus, in my opinion, is to prepare for MOAS and trillions of capital injections / transactions for MOAS. Now, what's interesting about this is, for those of you who have been keeping up to date with my videos, you will understand that one of the institutions involved with BNY is, of course, Citadel. So you can see how all of these short sellers and these brokers, that they are starting to all come in to links with each other. It may not be directly, but definitely you will see clues. And this is what we've talked about in the past. And you guys, thanks for watching. I'll catch you guys next time.